They claimed that the British Empire was built on ships, soldiers, and colonies. But the real driving force behind its global dominance was much quieter, hidden behind marble facades and mahogany desks. It was a financial system unlike anything the world had ever seen, a system that turned debt into power and money into empire. Britain's conquests weren't limited to muskets and cannons. It conquered with credit. Bankers in London used war, trade, and even famine as tools of financial expansion. The story of how Britain's bankers financed global dominance is the story of how the fusion of money and power shaped the world we live in today. We have to go back to the 17th century, because at that time England was nowhere near the mighty empire we imagine today. Spain and Portugal controlled vast overseas territories, France was rising, and the Dutch Republic dominated world trade with its strong navy and advanced financial markets. In contrast, England was small, fragmented, and constantly short of money. Wars with France and the Netherlands had drained the treasury. Kings borrowed heavily and often defaulted, scaring off future lenders. By the late 1600s, England's credit situation was a complete disaster. Without credit, you couldn't fund an army, build a navy, or project power. But in 1694, something happened that changed Britain's fate forever. Parliament approved the creation of the Bank of England. At first glance, it seemed simple. Wealthy investors who wanted to fund a military campaign against France offered to lend money to the crown. In return, they would receive government bonds paying fixed interest. To manage this, a central bank was created, a bank that could issue notes, hold deposits, and guarantee repayment of these loans. But beneath the paperwork, a revolution was taking place. The Bank of England institutionalized debt. It turned the unreliable promises of monarchs into securities that could be bought and sold. For the first time, the English state could borrow reliably, at low interest, and on a massive scale. This became the empire's secret weapon. With a stable public credit system, England could fund wars long after its rivals went bankrupt. While France, Spain, and even the powerful Dutch buckled under the weight of borrowing costs, England kept tapping into its deepening bond market again and again. Wars became financial battles, and England had mastered the conditions of the game. Look at the War of Spanish Succession in the early 18th century. A relatively small island nation managed to keep armies on the continent and fleets at sea for more than a decade. How? Not because it had more resources than France or Spain, but because the steady flow of credit from the Bank of England kept the war funded. Investors trusted the bonds, and growing revenues from the trade and industry, especially customs duties, guaranteed repayment. France's repeated defaults shattered confidence and forced it to pay high interest rates. War had always been about muskets and men, but now it was also about bond markets. Britain could borrow more than its enemies, and therefore fight longer. This system grew even stronger throughout the 18th century. During the 7 Years' War in the 1750s, Britain borrowed on an astonishing scale, raising over £100 million to fund campaigns in North America, the Caribbean, Africa, and India. An enormous sum for the time. France, though larger and richer on paper, simply could not keep up. War pushed the French crown to the edge of bankruptcy, eventually triggering the financial crisis that would spark the French Revolution. Meanwhile, Britain surged forward. It built a global empire and, most importantly, saw the rise of a wealthy investor class enriched by steady interest payments from government bonds. In short, war wasn't just patriotism, it was a business. But this is only half the story. Trade was the other side. In the 18th century, joint stock companies expanded rapidly, especially the infamous East India Company. This was no ordinary trading firm. It was a monstrous hybrid, part corporation, part government, part military machine. Investors in London bought shares expecting dividends from spices, textiles, and eventually opium, while the company raised private armies, bribed local rulers, and collected taxes from millions of people in India. The money flowed back to London, enriching bankers and bondholders alike. The system formed a loop. Britain borrowed to fight wars. Victories expanded trade. Trade produced revenue through taxes and company profits. That revenue repaid the debt. Repaid debt encouraged more lending. More lending fueled imperial expansion. On paper, admirals and generals ran the empire, but in reality the architects were the bankers, controlling the flow of money. By the early 19th century, the system reached new heights. The Napoleonic Wars lasted over 20 years. France was strong militarily but weak financially, relying heavily on plunder from conquered lands. Britain, in contrast, could continually raise money from the London bond market. At one point, interest payments alone consumed half the government's budget, yet investors kept lending because they trusted Britain's expanding trade networks and growing industrial economy. Britain defeated Napoleon not only on the battlefield but also in the financial arena. But funding an empire wasn't just about defeating enemies abroad. It was also about controlling the population at home. British citizens bore the cost of debt through taxes on tea, sugar, and tobacco. While bondholders received steady interest, ordinary people paid higher prices. Bankers grew more powerful and began dictating terms to governments desperate for funds. Britain's secret formula was simple. Debt was the weapon. Trade was the fuel. Finance was the beating heart of the empire. As the 19th century progressed, finance became just as important as military force. The real battles weren't fought in ports anymore, but in banks and on trading floors. This was especially clear during the Opium Wars. China sold Britain tea and silk but demanded silver, draining British reserves. The solution? Sell Indian opium to China and use the profits to balance the trade. When China resisted, Britain sent its navy. The result? China was forced to open its ports. British trade expanded, and profits once again flowed back to London. By the mid-19th century, Britain wasn't just the workshop of the world. It was also the banker of the world. London became the global financial center. Argentine railways, South African mines, Caribbean plantations, all financed by British capital. Sterling was the language of international trade, and British consuls and warships ensured debts were repaid. Then came the gold standard. By tying sterling to gold, Britain projected an aura of stability. Investors flocked to sterling assets, knowing they could convert them to gold on demand. This allowed Britain to borrow cheaply, lend widely, and impose financial discipline across its empire. Countries seeking British capital often had to align their monetary policies with London's expectations. Naturally, this system had winners and losers. For wealthy investors in London, it was a golden age of financial freedom and stable returns. For colonized nations, it was often a trap. Resources were extracted, debts imposed, and economies reshaped to serve imperial priorities. India, for example, provided enormous tax revenue and raw materials, yet suffered repeated famines as grain was exported to meet global market demands. Investors grew richer while millions starved. This was the brutal logic of the financial system: efficiency for some, ruin for others. Britain's power came not only from armies but from financial ingenuity, from turning crisis into opportunity. Wars that devastated other nations enriched British bankers. Trade deficits turned into monopolistic structures backed by force. Even crises became openings for expansion. America's rise in many ways was financed by Britain. Railroads and infrastructure were built with British capital. So why does this matter today? Because the financial order we use now, credit systems, government borrowing, bond markets, is a direct legacy of that era. When governments borrow trillions, when wars are financed with debt instead of taxes, when conflicts become profit opportunities for investors, it is the same playbook. Britain is no longer an empire, but the financial system it created still rules the world. History tells us a simple but uncomfortable truth. Real power lies with those who control money. Those who lend, set the terms, and direct the flow of capital. They are the ones who shape history. So, who holds that power today? With global debt in the hundreds of trillions, endless wars somehow always funded, and financial bubbles expanding and bursting while ordinary people suffer and bondholders remain safe. Have we really escaped the system, or are we still trapped inside it? Economic history suggests the latter, and the lesson is clear. Financial knowledge is not a luxury, it is your shield. Understand how money generates power. Question the debts declared inevitable. Recognize when inflation, bubbles, or global crises are used as opportunities for someone else to profit at your expense. Because history doesn't repeat. But if you don't understand it, it will crush you just the same. And if this gave you a new perspective, subscribe. I'm the financial history expert. And history has a lot to say. I'll show you where to look.